Top of the morning, top of the morning, back at it again with another one. And today, we're looking at the Nasdaq. If you don't know now, you know. Be sure to give us a follow on Twitter. The handle is SCHMDII, SCHMDII, and I'll be posting everything beyond the charts and as well as things on the charts, signals for free, etc., etc. And if you just want to connect or talk markets, I'm always down to have a good convo about it. So today we're looking at the price action from July's NFP. For those who don't know what NFP is, it is one of the big three red folder or high impact news drivers that we have. NFP, CPI, and the FOMC interest rate announcements. Those are the big three. NFP is my favorite one by far. Non-farm employment change. If you need more info on it, be sure to check that out on Forex Factory, Google it, investing.com. But all you need to know is that it occurs on the first Friday of every month. Sometimes not necessarily the first Friday, but it's a good rule of thumb. And yeah, man, it's a very, very nice thing to trade. Excuse me. It's a very nice event to trade, given that you know what you're doing, what you're looking for, etc., etc. But for me personally, it's one of my all-time favorites. So we're just gonna give it a nice top-down analysis. Just look at the movement for the day. Look for where we could have capitalized or taken advantage of price and such. So that's where we at with it. So the Friday, it's midnight somewhere here. Friday midnight came about. We had this price structure like so. Price NFP occurred round about somewhere here. Well, that's where price was when the event started off. I'm just gonna mark out this 4 hourly order block over there. And now we're going to go down to the M15. Order block over there. Bias is, of course, we can say bullish. We're looking at it in hindsight. I'm just going to put a projection fib on that manipulation over there. Just take a look to see how far it went up to. It did eventually get to that -4 standard deviation level. Good thing to note. If you've been watching the videos, you'll know exactly what that is. If not, be sure to check out the previous video, as I always speak on the projections and such. But without getting too far ahead, I don't want to make this one too long. I'm just going to go straight to the 5th of July NFP. 5th of July. So you recall that order block on the 4 hourly time frame that we just drew out. Price opened. You can see where the midnight open is. That's where the 8:30 candle is. That's when the news drops. As you can see, this candle there with the wicks. Very hectic wicks. So, in the past, something that I would do, or that would be encouraged that you do, is that you'd have two orders set. One above and one below. The idea was that whichever direction price ends up going in, it'll trigger you in and then you'll catch the direction that way. So if I was short, I'd have the short somewhere here, then I'd have my stop loss above there. So then when price sells down, I'll be triggered in and then I'll be part of the trade. If I was long, I'd have my buy somewhere there and my stop loss down there, so that when price moves to the upside, I'll get triggered in and then I'll be part of the trade. That method is don't do that, guys. Don't do that, because you can see here, I'm just gonna zoom in a bit more. You can see what happened here is that that 8:30, this is when the news gets released. Just look how violent this candle is. If you were bullish and you had your buy stop there and you had your stop loss over there, price would push up, trigger you in, and then work to the downside to hit your stop loss. You lose funds. If you were bearish, you'd have your sell stop order down there and your stop loss above there. You can see it went down also, triggered people in, and went up to the upside. So it's like it tapped the orders in both directions in an attempt to liquidate everyone. And then after that, usually 30 minutes after, we then begin to see the true move, the actual direction of what price is going to do. And that is indeed what we saw here. Just for quick context, you can note that these relative equal lows here, the sell stops or sell side liquidity. People who have been profiting from going along will definitely have their stop losses trailed towards that level. So price will do its best to seek out that liquidity or those stop orders to gain the funds to be able to push up in this manner, which it did. It's a very nice push up. I'm just going to give it a measurement. It's roughly about 200 and some points. Not bad, not bad at all. Not bad at all, you know? Not bad at all. So you'll just note how we had the accumulation. We spiked both sides with the sell side and the buy side liquidity. But then we started seeing signatures that hinted that price would likely go or continue in the bullish direction. One of those signatures that I look for is I take a look at wicks, and they can give a very nice indication as to what's more likely to happen. Pardon me. So this red line here, it just delineates the midpoint of this wick here, the halfway point of that wick. For price to remain bullish, you don't want to see price cross below that wick, or rather, you see the wicks. Other candles, they can wick past it, but you don't want to see a candle close below these wicks here. It's the last thing you want to see. You can see we didn't get anywhere near that midway point, and also note how price is respecting that 4-hourly order block that we drew up earlier. No close below the order block, no close below the order block, right? Price then begins to shoot up. This 15-minute candle there and this 15-minute candle there. We got the 9:30 move. Price came down. Look where it tapped into a fair value gap over there, as you can see. The high of this candle, the body of that candle, and the low of that candle formed that gap of inefficiency, where price was just delivered in the buy side, and on the sell side it hasn't been efficiently delivered. That's why a bullish fair value gap or buy side imbalance, sell side inefficiency, it's a busy. The opposite would be true for those bearish, so it would be a sell side imbalance, buy side inefficiency, a SIBI, or a bearish fair value gap, right? This candle, that candle, 9:30 came about, price opened, looked like it dipped down into that inefficiency before carrying on to the upside, and that was the trade. That was the best entry that one could have hoped for on this time frame, of course, the M15. I like this fair value gap. It's nested inside a order block on the M15. It's above the order block on above the 4-hourly order block. It has that fair value gap as well. And yeah, man, if you check the economic calendar, you'll see that the NFP numbers were positive, very positive. At the time of this recording and at the time of the NFP, the underlying narrative has just been the fact that the market is anticipating positive signs within the economy to justify rate cuts. Rate cuts, I mean reducing interest rates, which would thus make it cheaper for companies to borrow funds and thus expand. That's been the underlying narrative, or what people have been looking for and looking out for, with all types of economic data releasing and etc. etc. When the NFP numbers dropped, they were quite good, and the market was very positive, and we got that reflection within price action as well. So we had that nice push up, Very nice push up. I'm gonna put a fib here. Note how it was 1, 2, 3, right? And then at about what's this thing? Yeah, this is the half 3 one. At 9:45, how it came down here. Just note, I'm putting the fib on the candle bodies. I'm not using the high to the lows, right? I'm just analyzing these two candles here. I'll put the low of the fib there. Put the fib of the low over there. Let me go to the settings. I'm just removing the projections. For anyone who's wondering about my fib and you've just wanted the settings, just take a screenshot or pause the screen, and then this is what's up. The 0.62 and the 0.79, that's the OTE level, optimal trade entry range. And these numbers are just like standard deviation projections to help me determine where price could go up until, right? So here we had the 1, 2, 3 candles. We're analyzing when price would come down into that area. You see how the fair value gap lines up with the OTE. After we swept liquidity, being supported by a 4-hourly order block and M15 order block as well. It's probably random. With positive NFP results as well. Just a cocktail for bullishness, as you can see. And then it just pressed up. I don't even have to speak more on it. Everything is self-explanatory. I am, however, going to just go down further to the M5 to take a look at that 10 a.m. window. If you've been following us for a while, you'll know that we like to primarily enter between 10 a.m. and 11 a.m. So I'm just going to look for something on the M5 that would have offered us an entry after the 10 a.m. window. So cool, price is pushing up, 10 a.m. comes through. As you can see there, we have a fair value gap on the 5-minute time frame. Just gonna mark that out. Have that nestled within an order block as well. Note how we didn't get a candle or body close outside of the fair value gap. The wicks do the damage, but the bodies tell the story. And then we began to push up again. The fall down came at 10:05. We've got another opportunity at 10:10. And then after that, it just kept pushing. I'm gonna put a fib on that low there to that high, just using the candle bodies. Would you look at that? Fair value gap is in the OTE zone of this relative to this range here. Probably random. Good place to put your stop loss. For me, I'm gonna plot out the consequent encroachment of this downward wick here. Consequent encroachment is just the fancy way of saying the midway point. See that? A safe place would be at the bottom of that wick, but as long as it's like behind that midway point, because we have multiple PD arrays. You have 1, this fair value gap should support price. 2, this order block here, the opening price of that candle. Right, that should support price. And then 3, this midway point, price shouldn't get up to here. Then if it gets through 1, 2, and then 3, it's safe to say that the trade idea is invalid, or it's just not feeling you for that day. But that's what I would try to do. If not, just below the midway point of this wick here, I'd put it at the bottom. But me, being honest, I'd probably put it at the bottom. Let's just check out how many points that would be stop loss wise. That would be about 56 points. I don't know if that's a bit too high, but that is what it is. If you put say 56 points, you'd be looking for a 2R, so 112 points. Let's see if it did give us 112. It definitely did. This was about 112 somewhere here. And that was at what time? That was at 11:45. And obviously, as you know, it pushed much, much, much higher, you know? But this is good. Nice liquidity sweep. Tap into an imbalance. Broke a short-term high. At 10, we got that sweep of the short-term high. Came back. Retraced into a fair value gap at around 10ish, and then price began to push up. I really love looking at entries between 11 a.m. and 10 a.m. I've been seeing some nice consistency, and I'm just gonna continue speaking more and more and more on it. It's the silver bullet. If you know, you know. Thank you to the mentor ICT for speaking on it. This is just how I make use of his concepts and interpret them in my personal study. And yeah, man, beautiful day. NFP way. The NFP way. I'm just gonna put a projection fib using, what can I use? Let me use this manipulation here. So the low up to the high. As you can see, I like putting my projection fib on the price leg of manipulation that took the liquidity. In this case, I used this wick here. I look to take my first partial at the -2 to -2.5. We did get that nice reversal area. If we entered here and exited over there, that would be in 116 points. And if we had our stop there, that's 55-ish, 0.2. So nice 2R for NFP. And yeah, man, it's pretty straightforward. Close the charts and then come back another day. See what Monday has for us. But yeah, that's my point of view, what we saw for the July NFP. And we'll see what the rest of July has for us. Thank you all for sticking around, watching with us. And yeah, man, another day, another dollar.